How to buy an apartment building. Once you own an apartment building, you know your road to financial freedom and all the money you could generate, all the impact you could create in your life and other people's life is going to skyrocket. For those of you that don't know me, my name's Ketan Patel. I'm a high-performance real estate coach. I help real estate entrepreneurs with the mindset, strategy, and execution to get to their goals faster. Who does not want to own an apartment building? But why is it that very few people are able to pull this off, where for majority of the people, buying an apartment or a multifamily building just remains a dream? I'm going to break it all down for you in this video. I'm going to be talking about 3 things that must be in place to buy your apartment building. Let's get started. Number 1 is finding the deal, figuring out a particular strategy for your apartment complex, and also figuring out a market. Number 2 is the money, the capital structure, and there's a number 3. Number 1 and 2 are somewhat obvious. You might already know about it, but I'm going to take a deeper dive into it. And if you stick around to the end, then number 3 is where you will be surprised. That will really help you move the needle in the right direction. Okay, so let's talk about finding that apartment deal. The number 1 thing is we need to be focused. We need to have a focused approach when it comes to finding that apartment deal. First step would be to narrow down a market or 2. When you narrow down a market, the benefit is you get to know the players in that market. You get to understand per unit prices of the apartment buildings. You get to know the brokers, the agents in the area, and you get an overall feel of where everything is going. Over time, you get so much intelligent data that making decisions and writing offers will be much easier. And in the beginning, what people do is they don't really narrow down a market or 2. They are going all over the place. And when you do that, your efforts, your energy is wasted just chasing deals in all kinds of markets. So pick a market that you could study the demographics, sub-market sections, what's happening in the area, are employers moving in or out? Is there enough employer diversity where if an employer closes the factory or if a particular sector suffers, you don't have to worry about it because the job profile, employer profile is diverse, right? Is their net population migration is positive, neutral, or negative? If new people are moving in, you know that the demand of the building is going to go up, which will support your business. Step 1 would be to figure out a market. Now, step 2 would be to figure out what is your business plan. Are you planning to buy a business, buy an apartment complex with a core strategy in mind, meaning you're just going to buy it, put it on management, and then exit it someday down the road? Or you're working on value add strategy, which means you're going to buy the building, you're going to force the appreciation by driving up the rents, cutting down the expenses, optimizing the management, and this will enable you to sell the building at a higher price in maybe 2 years or 3 years. Or you're looking for an opportunistic investment, like developing something, converting something. Maybe it's a distressed building with 60% occupancy and you want to make changes and drive it up to 80% occupancy. So depending on your skill set and your interest, any of the strategy would work, but ideally it's good to just pick one strategy and pick a market or 2. And then this would help you really get good at understanding where real value is. So for example, if you looked at 20 to 30 deals in Orlando, and if you consistently see that deals are trading at $70,000 a door for these kind of amenity package and this kind of location, and now you find something that's 60, you know that's a deal because you have enough market data. But whereas if you've only looked at 2, 3, 4 deals in Orlando, you might not know the market that well. Also narrowing down the number of units, having a ballpark idea. Because an apartment building with 50 units versus an apartment building with 200 units are different businesses. They have different kind of management structures and numbers going on into it. So bigger the building, there's more specialized staff and support you have and you are managing them. Versus smaller building, you are more involved into the day-to-day, so to speak. There is no right or wrong answer, but it helps you to figure that out. So let's say you are targeting buildings between 70 to 100 units, and in your market, they are trading for 100,000 a door. So now you know the purchase price is around $7 million to $10 million. Now you know how much equity you would need, how much debt you would need, and you could have a game plan. But when you don't have that, and one day you are searching 30-unit building, the next day you are searching 200-unit building, what happens? You really don't know how much money you need. And very, very important piece of the puzzle is the capital, which I'm going to discuss in point number 2. So to recap, finding a deal comes down to figuring out a strategy for that deal, narrowing down the market, and figuring out the unit size. And this way you have a focused approach. You know what you're looking for. And when we know what we are looking for, the chances of finding it is much higher versus when we don't know what we are looking for. When we are just hoping to find a good building. That's just not a defined part. That's not a specific enough criteria, right? You could also set up more acquisition criteria to tighten this thing down even further. I'm only going to look at buildings that has 90% plus occupancies. I'm only going to look at buildings that meet certain criteria when it comes to expense ratios and all of the other technical numbers. It's up to you, but the narrow you focus and the tighter acquisition criteria you have, it would help you to implement your business plan. Now we are moving on to capital, money, right? We all need money to buy the real estate, to buy an apartment complex. How do we make that happen, right? So on a broad level, that's cut into equity and debt, right? Debt is something that you're borrowing, which means a private lender, a bank, an institution is going to leverage and give you a mortgage. It could be 65, 70, 75, 80% of the purchase value of your building. Just to make it simple, let's assume you're going to purchase a $10 million apartment complex and the bank's going to loan you 75%, which is $7.5 million. So what happens typically on a multifamily loans, it helps to develop a Rolodex of lenders. So as you are hunting your deal, start talking to lenders. That way you know what kind of rates are going in the market, what kind of debt coverage ratios they are looking for, what kind of specific numbers your lender is looking for. So this way, by the time you find the deal, you have narrowed down a lender or two, and it's much easier to discuss borrowing money when your property goes under contract rather than waiting once you have a property under contract, right? You could have a general conversation, and typically in the multifamily space, your net worth needs to be equal or higher than the amount of loan you are borrowing. And that could be your net worth, it could be your partner's, you could even have somebody that would be a loan guarantor. So it helps to be aware of these points so you could work on it, and once the deal is under contract, you could focus more on the due diligence of the deal rather focus on the financing. So that was all debt. Now let's talk about equity, which is the other 25% or 30%. And how do we get that? If you have a big check that you could write and fund the building, great, problem is solved. But if that's not the case, then we need to bring in partners or investors that would be investing in your deal. And how is that done? That is done through a systematic approach. You need to have your brand, you know, your website, you need to have a pitch deck. Just so you know, I've raised over $10 million. That's an area that I specialize as well. So hit me up with any questions you have related to that, and I'll be happy to support you there, okay? So what happens is you need to build a Rolodex of investors where you build a relationship on trust. You're showing them what you are going to do with your business plan, what you're going to acquire, renovate, etc. So you could have conversations around this. A key tip that I could provide you along this is to have some soft commitment in place. Before you even find the deal, you should have a bunch of investors interested in your deal. This way, when the deal goes under contract, you feel a little comfortable raising that money. Too many times people get a really good deal under contract and now they start the process to find investors and educate them and build trust. And what happens? You have 45 days to perform on that deal or 60 days, and that's a very tight frame. So if you want a less stressful experience, you have to put in the time and energy and the work needed upfront to build that Rolodex of investors. First of all, Hats off to you for sticking around and being this dedicated. That means a lot. That's what it takes to really get results in real estate. Everybody's interested in making things happen, but that 1 or 2% of people actually buy that apartment complex because they are dedicated. They want to learn. They want to take action. They want to do whatever it takes. Since you are here at this point, I'm going to release the most important part to get that apartment building. Strategy. It's the overall strategy. I'm not talking about individual strategy for finding the building. I'm talking about the overall strategy for finding the building. And we all are different individuals. We have different strengths. We have different passions. We have different personalities. So we have to find a strategy that works for us. That's the key. Let's just say you have a W-2 job and you're already putting 40 hours there. And now if you're trying to find the building and if you're trying to find the capital, if you're doing all that, that could be too much for you. And a good strategy might be to find a partner. Or you could be somebody that just does not like to partner with people. That's okay too. The important point is developing a strategy that will get you results faster. That is what I specialize in. So next thing would be figuring out where your strengths are. Buying an apartment complex means you need to find a deal. You need to have the skill to underwrite the deals. Look at the numbers and evaluate if this is a good opportunity compared to the other opportunities or not. You need to raise money from investors. You need to get debt. You need to put it all together. So if you are someone who loves hunting a deal, making connections with brokers and agents and owners and checking out buildings, that's awesome. Now you could maybe find a partner that loves numbers or talking to investors, loves everything related to raising capital piece, or it could be vice versa. Ideally, you want to focus on developing the strengths that you already have and find a partner that could support you with the other things. So you could just have a focused approach. Now also, what goes into strategy is the bandwidth you have. If you have a little bit of money to invest in this business, but you are already focusing on a full-time job, you might hire an underwriter that could check the deals, vet the deals for you, could get an inspector to check the property for you, could even find somebody that will help you process all of these things. That way you could focus on the important tasks. So to wrap this up, it's important to develop a good strategy for you based on how much time you have, how much money you have, what is your unique personality, what do you really like to do, and what your goals are. And based on that, you want to come up with a strategy. Might not be the perfect strategy, but somewhere to start that would improve your odds of success instead of just going out there and trying to find an apartment building. Because guess what? A lot of people are looking to buy an apartment building. And like I said, you need to be aware of how to find the deal, underwrite the deal, the capital structure, and the overall strategy. All of these things are learnable. You could learn these things and you could improve on it and you could execute, and sooner or later you're going to get result and buy an apartment complex. So if you are still listening, I know you're committed. You're committed to making that deal happen. And as you know, there's so many moving pieces. You could definitely take that journey on yourself, no doubt about it, and you could make that happen. But it might take 6 months, a year or two. Or do you want somebody like myself to coach you and guide you along these facets and expedite your journey? That is what I do. I coach real estate entrepreneurs to get to their outcomes faster, because this is the road that my clients are traveling. This is the road that I have traveled. So I know the ups and downs, all the bumps and everything that happens on the way. If you want to get to that goal faster, if you want to make it happen, click the link below, fill out the form, and we could do one-on-one strategy session. And I could give you some pointers on the strategy and what things you could do to take your game to the next level. Please subscribe. It's very cold here. I'm out here in the cold making this video for you. See you in the next video.